Welcome to TradeTheNBI.com. This is John. This report is for the 29th of January, and you can see we pushed all the way back up to the little gap that started the beginning of the week. And, a lot of everyone was on the whole China AI app thing. Turns out that it looks like they may have appropriated or used their chat to learn from uh, ChatGPT or whatever. Irrelevant. The broader issues of the trade war situation and what's going on globally have certainly more impact, and that's where you see a much broader draw of things. What we're looking at next is the Fed. But, it's an interesting thing. Nobody's really all that interested in the Fed anymore since the inauguration. Sort of taken a back burner and very different than, everyone was bated breath during, Biden administration for the Fed. But I don't think we're going to see the Fed do much of anything. I think they're sitting it out. And what can they do? They're hamstrung. I mean, fine, they want to go lower rates, but that would only be a bonus to Trump. So they're not going to do that. And the reality is inflation is not tame. Now, if oil can continue to drop, okay, well, then we'll talk about it when it gets into the mid 60s or lower. But we're not there yet, not even by a long shot. We look at it from a daily standpoint, though. You still have magenta over yellow, complete wipeout of shortages whatsoever. I mean, they just took their profits and ran. Very happy with that. They were content. Shakeout is making an improvement, and you've also got a situation where you're going to end up with a higher shakeout at relatively even highs. So the potential for breaking out even further is there. You'd have to see pretty much the orange here not dip below red and pop back up on DOC in order for the pushback up to break down significantly. As long as you get this immediate kind of reaction from orange, if it continues its dip where you have short-term buyers coming up and it crosses over just like it's doing now, that's usually continuation to the upside. Even if it's short-lived, it still works out that way. Treasuries, and you can see that really hasn't moved much in the last since the inauguration, actually, even before, because there really isn't a whole lot they can do. They don't know what the policies are going to be going forward. They don't know how much impact the talking is going to move oil lower. Versus actual constraints, and whether or not those constraints get worked out. We can see that oil is still relatively high, given the ability to produce what they do. There's no real reason that it's at these levels other than artificial supply constraints, plain and simple. The euro just getting back all of its fake baloney and continues to struggle. It's not going to be any help. The whole idea is that will the U.S. be slower than European growth? No, not happening. Just not even a thing. From a gold standpoint, yeah, we would expect gold is going to continue to rise, and of course, it's going to have its back and forth. And when you have the market trailing on it, selling everything, that impacted gold, also crypto. They're going to resurge, and it's interesting. They're slightly behind where the actual S&P and Nasdaq move return are, so they may actually exceed expectation. You don't even have a crossover yet, but almost to the magenta. And when that does happen, then you'll probably see an acceleration in these. And some of it's just going to depend on how it plays out with some of the proposed trade wars and those battles that are going on right now. And a lot of that's behind the scenes. It's going to take another month or more before they're all worked out and there's an actual resolution to things. We're not at that point. You can see that ETH is still continuing to be a trailer relative to Bitcoin, which has really stood out amongst everybody. In the crypto at least, and I don't see why that will change. They need to have a lot of regulatory removal and stuff that will make things work out better for them. If we turn to the 50K, yeah, pretty clean ride. We still have some interesting setups here with NBI white spikes on that, and that may pull us back on any weakness or selling that takes place. So we'll keep an eye out for that. When we look at our 5K, 5 minute, actually, We can see the early morning had its little fade, and then as soon as the open was about to happen, it was just straight up from there. It's fairly clean action overall. You can see magenta leading MBI throughout most of it. It wasn't until the post market that things changed a little bit, just for a fill back. But you can see here in the European session, it's a nice ride back and forth. And where we're at currently is just about par. Nothing too exciting to talk about overall, though. We continue to see from the readings that the market bias is still to the upside, and positivity abounds. So that's where we're at for now. As always, though, anything relevant, I'll put in the Skype chat. Have a good one. Trade well.